Hi everyone. As all of us are aware that the Honorable Supreme Court has delivered a landmark ruling on 2nd of March 2021. We at Advait Consulting put before you the simplified version of this landmark ruling in a series of 5 videos. In the first video, we'll be analyzing the background and history. I, CA Radhika Bhangdia, Assistant Manager Direct Taxes at Advait Consulting, put before you this presentation. In the second video, we shall be analyzing what actually happened in Supreme Court. In the third and fourth video, we shall analyze the judgment in detail, and in the last video, we shall conclude by discussing the way forward on account of this judgment. In my discussion, I will touch upon some of the basic provisions of the Income Tax Act and then directly switch to the controversies that existed till the time the case reached to the doors of Supreme Court. Generally, there are two rules of taxation, the source rule and the residence rule. However, Income Tax Act has certain deeming provisions as well, which says that even if the income is not actually accruing or arising in India, that income shall be deemed to accrue or arise in India if it satisfies certain conditions which are laid down by the Act. Out of all the deemed income, royalty income is one such income which is governed by this provision. Section 4, read with various withholding provisions, specifies that withholding tax needs to be deducted on all the income, whether they are actually accruing in India or whether they are deemed to accrue or arise in India. If this was the rules of taxation, on the business side, buying licenses for software usage is a very common business transaction these days, and it is also fairly common that such purchases happen from foreign suppliers. Now, when an Indian entity makes payment to a foreign supplier on account of software usage, whether that consideration will be treated as royalty income or it will be treated as business income is a point of question here, because on the basis of this analysis, the taxability in India will be determined. As this transaction is rotating around computer software, I'll touch upon what a computer software is and when its existence came into the Income Tax Act. The reference to computer software was first made in the year 1991 under section 916, where it was defined as computer software means computer program recorded on a disk or any other storage media, or it also includes program or any customized electronic data. Computer software also has its reference in the Copyright Act, where in the year 1994, the Copyright Act said that the definition of literary work will include computer software. This was the time or the era when the references to computer software entered the legislative scriptures. On the other hand, software industry was flourishing and was continuously playing a critical role in the businesses. They also started offering wider array of licensing options. Earlier, there was one-to-one correlation that the software is prepared or designed as per user-specific needs, and then the entire license in the software is transferred to the user. However, as the usage of software product increased, the concept of shrink-wrap software came into existence. It is a software which is not designed as per user-specific needs. It is designed as per business-specific needs. And when this transfer of software happens, only the user access rights are transferred and not all the rights like right to amend, right to transfer, right to customize, all these rights are not transferred. So here arises a question that whether if a person is having a user access right, will that be considered as having copyright of a software? Again, a debate point. Further came an era where software started incorporated into the hardware and the hardwares are sold for commercial purposes. For example, cell phone. Cell phone manufacturer will buy software from a foreign supplier, incorporate it into the hardware and sell the hardware. Now, in this transaction, whether it will be considered that the cell phone manufacturer has a copyright of the software as he is using it for commercial purpose is again a question of debate. On account of these questions arising and software licensing world evolving very fast, Income Tax Act was also evolving. The definition of royalty already existed in the Act since 1970s, but the references to computer software came a little later. It will be very interesting to analyze the interplay between the Income Tax Act and the Copyright Act, because it is very important for a transaction to be considered as royalty income to have a transfer of copyright and not the transfer of copyrighted article. However, Income tax authorities in India all consistently took a view that this transaction will be considered as sale of copyright and hence will be royalty. However, on the flip side, if it is considered as a copyrighted article, then it will be treated as business income, and if the seller does not have any permanent establishment in India, this transaction will not be taxable in India. This matter has been subject matter of multiple judicial rulings in the past. We will discuss some of the landmark rulings of Karnataka High Court and Delhi High Court. In the ruling of Karnataka High Court, the case of Samsung Electronic Company had a checkered history. The AO was of the view that this transaction will be royalty. CIT appeals also upheld the order of the AO. When the case went to tax tribunal, the tax tribunal held that this is a sale of copyrighted article and hence it will not be royalty. However, the case travelled all the way till Supreme Court, and Supreme Court again remanded the matter back to Karnataka High Court, stating the question of law, and had asked Karnataka High Court to deliver a ruling on whether this transaction will be royalty or not. While delivering the ruling, Karnataka High Court held a very generalized approach and said that all of these transactions will be considered as royalty and hence TDS provisions are applicable. When this was happening in Karnataka High Court, there was another case which was going on in the Delhi High Court, and the Honorable Delhi High Court had a contradictory view in the case of Ericsson AB versus DIT. Delhi High Court held that it is a sale of copyrighted article and hence it will not be considered as royalty. On account of this contradictory rulings, many rulings are passed by AARs, High Courts, ITADs, and appeals arising out of these rulings are pending before the doors of Supreme Court. It will be very interesting to see what actually happened in Supreme Court in the case of 100 appeals pending on this matter. Stay tuned with us in our next video, and if you have any questions with respect to the same, please put it in the comment section. Thank you.